2020 is finally over, and we are in a new decade now. With the ongoing crisis in the world, many industries like travel, hospitality, retail, airlines are at their lowest demand levels. As per a study by Mckinsey, it might take up to 5 years for some of the worst hit industries to come back to pre-COVID demand. And on top of this, the stock market is currently trending at all-time high levels. With all this, it's getting harder and harder day by day to find good investment deals where investors can have a peace of mind and gain decent returns from the stock market. So today, we came up with 3 stocks for you that we believe every single company in this list is going to be a home run for the investors in the coming decade. Before we go ahead, for the sake of time, we have decided to make this a 3-video series in which we'll discuss each stock one by one in detail. Now, before we jump onto the first stock, let me quickly list down the factors that we use to evaluate these stocks. First, market leader. Every stock in this list is already a market leader in its own domain or vertical, which means they define the direction of the industry and hence they're always at the forefront of the innovation and growth. Second, growing trends. All 3 companies in this list follow a strong, developing and growing trend today, which is going to last for a long time and definitely for the next 10 years. Third, proven market moat. All these companies have already shown economic moat and innovative mindset in their own respective industries through their amazing products. Customers love their products, which becomes a huge barrier to entry for the new competitors in the market. Scale. Building prototypes is hard, but scaling your products from hundreds to thousands to million customers is even harder. And without scaling, a business is not sustainable. All 3 companies on this list have already shown amazing growth and scale until this point. Lastly, and the most importantly, these companies are still very small when compared to their TAM, aka total addressable market. Some have already seen tremendous growth. They still have even bigger future opportunities ahead of them that investors can benefit from in this coming decade. So the first stock that we're going to discuss today in this first episode of this series is Shopify. For those who have never heard of Shopify, Shopify is an e-commerce platform provider that allows its customers to create their own Amazon-like e-commerce platforms to sell their products and services. So before we jump into discussing Shopify in detail, let's take a look at Amazon. Undoubtedly, world's biggest e-commerce platform today, netting more than $96 billion in revenue in just Q3 2020. Around 54% of products in Q3 2020 were sold by third-party sellers, aka independent sellers or mom and pop sitting at home trying to sell cups online. But there's a problem. If a product or category works really well at Amazon, Amazon comes up with their much cheaper knockoff offering for the same product under their own private label brand called Amazon Basics, and sometimes from the same seller. Shopify, on the other hand, empowers sellers to create their own e-commerce platforms. Sellers get full control of the website. They get the freedom to expand their catalog in any direction with any product. They get to keep bigger margins on each product, and most importantly, they feel safer at Shopify as it's not a typical e-commerce platform, at least not today. Shopify provides one platform that serves every channel regardless of the devices used by the customers, where all these channels lead to a single integrated back office. That means you can sell your products in a physical brick and mortar location, and Shopify will help you manage your payments, point of sale systems, inventory, etc. Shopify even helps you with online marketing to bring traffic to your website, which translates to higher sales, higher revenues, and at the end, higher profits. They even partnered with Facebook, Snapchat, and TikTok to easily sell products on those social platforms. You feel like missing an opportunity by not offering your products on other bigger e-commerce platforms? Shopify even helps sellers to easily integrate with Walmart, eBay, Amazon, and Facebook shops. And now, Shopify has also entered into Amazon's world by offering Shopify Fulfillment, a service very similar to FBA or Fulfillment by Amazon, where orders are picked, packed, and shipped by Amazon for a very small fee, and sellers concentrate on maintaining their shops online and working with suppliers to ensure product availability. Apart from all this, Shopify offers more than 5,300 apps on their App Store, which sellers can benefit from to run their business well. Today, Shopify is the biggest threat to Amazon. As per a report from eMarketer in May 2020, Shopify is sitting at second place, holding around 5.9% market share in US right now, right after Amazon with 36.99% market share. Now, this gap might look huge today, but it's decreasing on a daily basis as more and more people prefer to buy products from independent e-commerce platform online rather than going for these e-commerce giants. Shopify is successful already, and their numbers support that claim. Let's look at some of the data. In the last 5 years, Shopify has shown a very strong growth in their revenue, consistently growing at the rate of more than 50% annually and a CAGR of more than 50%. Due to current crisis in the world, that also pushed their revenue for Q3 2020 by 96% year over year. Today, two of the primary sources of their revenue are merchant solutions and subscription solutions. Merchant solutions include services like Shopify Payment, Shopify Shipping, Transaction, Shopify Capital, and Shopify POS. On the other hand, Shopify subscription is basically monthly recurring subscription revenue which merchants pay based on their selected plans. In the last 5 years, Shopify has increased their monthly recurring revenue coming from subscription solutions at 47% CAGR, which shows an amazing growth year over year. Not just that, Shopify has also diversified its subscription solutions revenue through various products. And with the pace Shopify is innovating today, they will keep introducing newer products under their subscription model. Now that's amazing. But wait for it. Shopify's real success lies in merchants' success. If merchant sells more inventory, Shopify will earn more merchant solutions revenue. And that's because every time merchant makes a transaction, Shopify gets a very small cut for various services and products used by the merchant to successfully run their business. For this kind of revenue model, sky is the limit. Shopify's GMV, aka gross merchandise volume, has increased from 7.7 billion in 2015 to over 61 billion in 2019. That's a CAGR of 51%. That's an amazing growth, and it's not stopping anytime soon. For the matter of fact, in Q3 2020 alone, Shopify doubled their GMV over Q3 2019. Now, you might be thinking, this is a great company, and to achieve such great numbers, they must be spending tons of money. Conversely, they have been able to reduce their operating expense consistently over the last 5 years, reducing from 58% of their revenue in 2015 to just 37% of their revenue in Q3 2020. By the end of Q3 2020, with $2.7 billion in cash and $3.7 billion in assets and no debt, Shopify's balance sheet is incredible. On top of that, Shopify owns another 8% stake in a firm that went public recently, which is currently worth $2 billion as per today's valuation. Innovation has always been a strong characteristic for Shopify, and with equally powerful execution, Shopify has been able to battle against big retailers like Amazon and Walmart. With current portfolio of products providing a very stable cash flow to the company, some big upcoming milestones like international expansion, fulfillment network, and wholesale e-commerce expanding their TAM, and some recent acquisitions helping Shopify achieve operational excellence, Shopify is on its way to disrupt the e-commerce market in coming years. Not just that, Shopify's strive to become one-stop shop for SMBs will help it redefine e-commerce and provide a vertically integrated product for online or physical businesses in future. All that said, Shopify stock is expensive. Current stock price has already ran ahead of its time. With revenue of nearly $2 billion and with market cap of over $100 billion, company demands higher valuation. But at the end, what is stock market? It's all about demand and supply. What seems to be a cheap valuation to a growth investor could be a very expensive stock for a value investor. Always remember, winners keep winning in stock markets. Companies like Shopify always demand a higher valuation, and investors will have to pay a premium to own these companies. At Inshort Finance, we still believe Shopify will be a $1 trillion company in the next decade. So we would recommend to start a small position with the next dip in the stock price. And remember, dollar cost average is never out of fashion. That being said, please, if you like our content, consider subscribing.